More now on that very rough day on Wall Street. Stocks plunged following some big earnings misses from big blue chip companies and worries that a stronger dollar and tumbling oil prices will dampen future sales and profits in many sectors. On the worst day in the markets in 3 weeks, the Dow fell 291 points. And that's the good news. At one point today, the blue chip index was off close to 400 points. United Technologies, the only gainer in the index today. The Nasdaq snapped a 6-day winning streak. It fell 90. That's its worst day since back in October, and the S&P was down 27. Dominic Chu now with a look at some of the Dow components having a big impact on the overall markets today.
There are a couple of big headaches that are showing up in big cap earnings reports: the weakness in the oil and gas business and the strength of the U.S. dollar. The latest examples come from big Dow components, like Caterpillar. The heavy equipment maker fell sharply after cutting its full-year profit forecast because of falling oil prices.
Oil is a piece of our energy and transportation business. It's worth about, oil and gas is about a third of that business. Actually, the natural gas piece of that business is doing pretty well and so far holding up. The oil piece, though, is what we're taking down, and that's the primary number for our reduction in 2015.
Investors will also be hearing much more about the effects of the U.S. dollar on disappointing quarterly results. Stronger dollars mean that companies that do a lot of business outside the U.S. lose some of their profits when they have to convert them from foreign currencies back to the more expensive dollar. Chemical company DuPont, drug company Pfizer, industrial company United Technologies, and consumer products company Procter & Gamble all made mention of the negative effects of a strong dollar. In the case of Procter & Gamble, which makes everything from Tide laundry detergent to Pampers diapers, it said it experienced the biggest currency impact it's ever had this past fiscal year.
There were definitely challenges, and FX was the prime one. Virtually every currency, about 14 points on the quarter. Now, we were able to accelerate and increase some savings work to offset part of that, but we continue to invest as well in our business, our brands, products, capabilities, and people, because it's the right thing to do.
According to Thomson Reuters, of the 18 S&P 500 companies that have offered profit guidance for the current quarter, none have managed to meet or beat average Wall Street estimates. The dollar and oil could continue to be an issue as we head deeper into earnings season. For Nightly Business Report, I'm Dominic Chu.